So how did I make $920 trading Microsoft call options? So on the 13th, 11/17. Let's see, 11/17. Let's see. So this candle right here. So basically, as soon as I saw that Microsoft landed on the on the 50-day moving average, I bought Microsoft call options, waited for a bounce off the 50-day moving average. At 11:38, I sold out the position, making a gain of $920 trading Microsoft call options. So it's pretty much what the strategy is step one, try to find a stock that you're interested in. Step two, try to analyze the moving averages. Step three, try to use the moving averages to decide to either play calls or puts. And then step four, right? Step four, I guess, sell out the position for whatever your percentage target is. For me personally, I try to aim for a 5 or 10% target most of the times. Reason is because I like playing it safe most of the times, and if I'm feeling really confident, I'll try to aim for higher percentage targets. That's only when I'm feeling confident, but everyone has a personal risk tolerance level. Everyone is different when it comes to trading. What most people try to overdo is that when they try to trade, they try to aim for those exaggerated gainers, whether it be like 50, 100% gainers, which is, it's possible, but it's very unlikely for that to happen most of the days, like all the times. And most of the times, let's say if you're lucky that one day, you could be unlucky for the next several days. And so most of the times what happens is that most traders see that, okay, maybe the market is like, it's probably like scammy, or it's like, they think that the stock market is a scam, but that's really not the case. I feel like what most people need to learn is that when you see that, whatever your profit target is, and if you see that, it's right there in front of your face, take it. Don't wait any longer, because if you wait any longer, you never know if that position could all of a sudden go down tremendously and you'll never see that profit ever again. And instead of taking that little small profit that you could have taken, now you're going to take a big loss. So I feel like what most people need to do is try to analyze their risk tolerance level set in mind. Try to have a game plan set in mind as well. So basically, so like I just showed you guys, let's see, like you could have played call options on Microsoft as soon as it landed on the 180 or 200-day moving average. Buy a little small position, buy a little small position, try to see if it can use the 180 or 200-day moving average as support. If it does, good. Then what you can do is try to aim for your exit position. So your exit position could be, as soon as it approaches the 9-day moving average, I'll sell out the position once it approaches the 9-day moving average, or I'll sell out the position once it approaches the 20-day moving average, or I'll sell out the position once it lands on the 50-day moving average. So basically try your best to, try to, aim for, your entry points and your exit points. That way, when it's time, you know where to execute, and you're not panicking on where to enter or where to sell out. And that's basically what the gist of it is. So basically try to use the moving averages as either entry points, whether you're playing calls or puts. And then basically step 2 is just to sell out at your preferred percentage target. What I mean by preferred percentage target is pay attention where it says 16.46%. So basically pay attention to your percentage of the position. Basically if you're up 20%, okay, my risk tolerance level is to sell out the position once it's up 20%. My risk tolerance level is to sell out once the position is up 40%. And then my risk tolerance level for when I need to cut my losses is when my position is down 10%. Once my position is down 20%, 30%, whatever your risk tolerance level is, try to aim for those percentage targets, and for me personally, like I said, I always try to aim for either 5 or a 10% percentage target. Yeah, so I try to aim for a 5 or 10% percentage target, and then if I see that the position is down tremendously, I'll try to cut my losses once the position is down 10%. Now if I'm feeling confident in that trade, I'll stick to that position even if it is down 10%, and I'll just go according to whatever my risk tolerance level is, or I'll go according to however that particular stock that I'm trading. I'll try to analyze the chart, whether it be analyzing the moving averages or analyzing the 30-minute time chart, or trying to analyze the 4-hour time chart, or indicators that you might be using. Me personally, I try to stick to just using the moving averages and I guess the 30-minute and the 4-hour time chart mostly. I don't use the RSI or the MACD indicators or stuff like that, or the RSI. Yeah, I think I just said RSI, but basically I try to keep it simple. That way, I have I guess you could say a simpler way of trading, because I feel like what most times happen is that most people will try to aim for higher, like they try to aim for big percentage targets, and then all of a sudden when that doesn't happen and they don't know when to cut their losses, they'll just have to suffer the consequences of taking that big loss and thinking that, oh, probably the stock market is just a huge scam. But it's really not. It's just learning the process of how to trade, how to cut your losses, how to manage your risk tolerance level, and that's pretty much it. Like I said, this is not financial advice. As always, take care, and I'll see you guys in the next video. As always, take care and bye.